Brent crude prices, when last did we actually see it at $112 a barrel? It's actually been a while. We're worried about some of the numbers that came through on Friday on the employment front in the US. We're worried about global growth. And then we had a very interesting session on the French and Greek elections as well over the weekend. Is this all weighing on Brent crude, and that coupled with a very important meeting mid-May?
I think we have several factors which pushed oil prices lower. The downturn already began last Wednesday with the release of very high U.S. crude stockpiles, the highest level in more than 20 years. Then some weaker than expected U.S. data from the labor market and the non-manufacturing sector. And on top of this, the news from Europe with the election results from France and Greece adding to a risk aversion, and this combination puts immense pressure on oil prices and also caused financial investors to cut back their long positions, which had been increased massively right before the price slump. So there's good reason to believe that prices had declined and could decline further from current levels despite having fallen already quite sharply.
Okay, so I mean, falling quite sharply, you're saying that there's a possibility we could see a further, weakening in that Brent crude price. I mentioned the 23rd of May, and that's the meeting with Iran and global powers to discuss the current sanctions against Iran because of the nuclear enrichment program. If we also see headway being made there, is that also going to be a catalyst for a movement further to the downside?
Yes, the situation regarding Iran had eased somewhat in recent weeks, which led to a decline in the geopolitical risk premium and also added to the downward pressure on oil prices. And this risk premium was the main reason for the 20% gain in oil prices in the first 2 months of the year. So it's very important to watch at this meeting, since the physical market, oil market, is in oversupply of more than 2 million barrels per day, according to latest OPEC figures.
If we could also just touch on the growth scenario that we're looking at. I mentioned the non-farm payrolls coming through from the US on Friday. Are we going to look at a much softer global demand scenario, particularly coming through from the US?
I won't go this far. The economy still seems on track towards recovery or moderate growth, albeit growth might be not that strong that some had hoped for, and this is enough to dampen the demand growth outlook also for oil prices. And since the US is still the world's largest oil consumer, this is negative news for oil prices.
Yeah. Okay, the WTI price though, Carsten, when you look at that, it's actually breached that key 100 level. We're starting to see WTI and Brent crude. We know that there was a massive difference between the two. So the gap is now starting to, of course, come through far better than what it was earlier this year. Are you expecting a normalization in the next coming months?
We had seen some narrowing already until mid last week before this weaker US data came out, and would expect prices to narrow again in the upcoming weeks since the Seaway pipeline reversal will start in mid-May, which will allow to transport crude oil from the US Midwest from Cushing to the US Gulf Coast, and should allow a decline in crude stocks at Cushing, and this should favor a narrowing of the gap between Brent and WTI.
Let's also just touch on the French and the Greek elections that happened over the weekend. Is this going to start changing a lot of the risk profiles of the commodities, particularly coming through from Brent crude, given the sensitivities that we're seeing in the Eurozone and then the big talk between austerity versus growth?
I think most of this election outcome was already expected before, so it will depend on how the politicians in France and Greece will react. Will they water down these austerity measures completely or only partially? And some measures to promote growth could also be positive for demand for prices. So not everything is bad here, but still there's some risk and uncertainty in the market which should weigh on prices in the near term.
Fantastic, Carsten. Thank you so very much for joining us.